Hi, good morning. You're watching The Market right here on 18 with me, Aisha Faridi, Nikunj Dalmia, Avan Dabash in the studios. And what happened overnight, let's just tell you about that first. Because while the benchmarks, they maintain their bullish momentum, the FII selling has actually eased off. And we will get you the chronological order from the start of the week up until now. Because yesterday's quantum, the selling of just about 736 odd crore rupees, that is starkly lower than what we've seen from the start of the week up until now. That said, you had IT as well as metals lead the gains, and I think if you were to just get into the nitty-gritties of it, the Adani group and the new age stocks, new age tech stocks rather, Nikunj, the recovery and the rebound that they are showcasing, that's in a different zone altogether.
You know, Aisha, just think about the market setup in last 3 weeks or 4 weeks. So much has been thrown at the market. Yeah. You had a budget, you had a policy, Fed earnings, and the sell-off in Adani group of stocks.
And recovery.
Yeah, recovery also. Volatility in Adani group of stocks. But benchmark indices actually have been firm like a rock. YTD change for benchmark indices, especially the Nifty, and we'll just take a moment to mark that, is actually flat. Considering the news flow, considering the twists and the turns in terms of how the market volatility has been, the fact that despite FI selling also, I'm adding one more ingredient, benchmark indices have been flat. So Nifty may not give you any kind of a direction, but with this kind of a news flow, as Nifty is not breaking down, for me, that is a true blue sign of market resilience. Now we are at the fag end of the earnings season. Hopefully the volatility in some of the Adani group of stocks and the news flow will subside. We've heard from Fed whatever had to be indicated, and FI selling, which is a trend, if the FI selling reduces, then it is entirely conceivable to assume that we could be in for a decent Feb. Mid-cap stocks have already started opening up. Risk-on trade has started. Pockets like fintech and consumer tech, they have actually started bottoming out. So the trade orientation, the way I look at it is that if you get a little bit of push from a Reliance or some other heavyweight, Nifty could attempt to go at the higher end of the range. But in the small and the mid-cap space, the market breadth, I guess there is definitely an advantage on focusing on individual stocks. A lot of bombed out sectors are making a comeback, and I think that clearly seems to be the theme.
Yeah, just looking at the FII trend from a 932 crore rupees sell figure on 3rd Feb, it went up all the way to 2,559 crore rupees just a day before. And yesterday, yes, the figure was much easy at just about 736 odd crore rupees. And even if you look at the F&O action, be it the Nifty, which is showcasing short covering, of course, we will throw more light on this data with our chartists in just a short while from now, and the Nifty Bank, wherein you are seeing some fresh longs coming in. But I think the joker in the pack, Avan, has really been the recovery and the rebound in the new age tech groups.
Yeah, as Nikunj was saying, those bombed out sectors making a comeback, and that's exactly what we've seen in the last 3 days, the kind of return that we've witnessed in a lot of these stocks. And Nikunj, the fact that brokerages, some of which who had been very cautious or had written these companies off, are now, jumping on the bandwagon with their buy ratings and their long-term target prices.
Well, only Macquarie, to be fair. I mean, other brokerages did have a buy on Paytm even ahead of the numbers.
But they're upping their target price.
Yeah, because numbers have been strong, Avan. See, a lot has changed in terms of the way the promoters of some of these new tech companies are approaching their business. Growth was never a challenge for some of these new tech companies because they are at such a curve that they will continue to gain a dominant market share. It was about how you were growing and what was the cash burn. I think there is a serious attempt and a commitment now, and there is visibility in the way how some of the new tech and the consumer tech companies now really want to orient themselves. Like they say in Hindi, "Der aaye durust aaye." I guess that is the way how some of the consumer tech and the fintech promoters have realized that the rules of the private equity market versus the rules of the auction market, which is the stock market, are very different. And there is not a subtle realization, there is a big realization that things are changing. Now, Paytm has made a comeback. Let's see what we hear from Zomato. Because these are the two stocks which in a sense would be an indication of where some of the consumer tech and the fintech companies are moving. I will not be surprised that globally also that if interest rates are picking out, these stocks now not only will stop falling, they are the stocks which you want to invest in now as little bit of your 5 to 7% of your portfolio, it really makes sense. I mean, same time last year, nobody believed that PSU banks and value stocks and Coal India and the NTPCs of the world will make a comeback, but they made a comeback.
And how?
Every year, sector markets gives you 2 or 3 pockets which rotate beautifully. And after a bombed out 2021 and the hiccup in 2023 initially, can they really come back from the fall? I think stability is definitely back. These stocks are not going to fall now, and depending on what you will hear progressively, you will see the stock moving. So worst is behind us, let me put it this way.
Seems to be, at least looking back at the price action. I was just looking at the 3-day returns. Let's just flash that graphic up for you on the screens. The 3-day returns for Paytm is up a solid 21%. PB Fintech has held up about 12%, and Zomato, which is due to report its numbers, that as well has jumped up 11%. So let's see whether the conviction stays. And I think, like Nikunj was rightly saying, if you hear a similar commentary and tonality post the earnings from Zomato as well, who knows, whether the entire space could be up for a re-rating as well. But a lot of earnings today. We'll have Hindalco, we'll have Lupin, Voltas, Zomato today, Page Industries, Hindustan Aeronautics, LIC, and then Adani Total Gas as well. Busy day ahead, Nikunj.
Yeah, I mean, Zomato is the one which is expected to come out with numbers post-market hour. They were the first one who came out and said that, look, we are committed to walk on a path of profitability. So now the commitment has to turn into visibility because Paytm has got a leg up. They've demonstrated that what the path of profitability will look like. So Zomato today really has to give concrete numbers. There's a marked improvement in their matrix now. The cumulative losses have started coming down, but the fact that they started this 10-minute delivery service, they got a lot of attention because of that. Suddenly that did not scale up. They've decided to shut it down. So there is no harm. Markets would say, okay, there is no harm if companies are trying to attempt into a business, but as long as there is a realization that these businesses are not creating value, if you're shutting them down, markets would like that. So Zomato, from a market curiosity standpoint, I think would be of immense importance. It's a 2-digit stock. It's a high beta stock. The stock's gone up from 44, 45 levels to what, 54, 55. Okay, hello, 55 levels. That becomes the number one number. I think LIC numbers are also there today.
Yes.
Last quarter, LIC did make some changes. Can they come out with something big in terms of can they continue to maintain that kind of a growth momentum? And this is a stock which really has been on the receiving end post the budget because of the change in regulation. So that, to my mind, would be the dark horse. I would be very intrigued to look at the numbers from HPCL because this is the first time you actually could see a normalization of profit in HPCL because now the under recoveries have come down. So that would be the third number which I would be watching out for.
Oh, yes, indeed. So watching out for a lot of these quarterly numbers in today's trading session. But let's hear it out then from Atul Suri of Marathon Trends PMS. He's firm about the target that he set for the Nifty for December, 21,500. That stands. He remains positive on this target despite the correction in the markets. Let's listen in to the rationale.
When that we spoke to you last, that was before the budget, before the Adani group of stocks route. Your Nifty target was 21500. Any reason for us to believe that you would like to revisit it today?
No, not really. See, and these are not, in fact, these make it much stronger. This makes the conviction stronger because, nothing moves linear in our market. Everything is zigzag, and every philosophy, every thought process, every theory gets tested. And of course, the theory gets tested. When the stocks are down circuit, you ask yourself, oh God, is it going to spread? Is it going to topple the market? But the way the market has performed, the reaction that there is, and the breadth there is, in fact, makes me positive. And the biggest cause of positivism, which I shared the last time with you also, is the way global markets are performing. It's not just India. The kind of move that you are seeing in global markets is phenomenal. The breadth you're kind of seeing that is happening, the way European markets are performing. So this gives me a sense that this bull market is a global bull market in equities. And India, though in the short run may have underperformed, but I feel that when this kind of plays out, we will still be the best performing market or among the best performing markets. It's just that we have run up very fast. We broke out early. It's like a race. You break out early, you run early, you need to pause, you need to take some rest. In that, you also get tested with this whole Adani saga. And still you find that, you're not tripping. You come back, and I feel that India will pull up in the short term.
The government is very keen to push the new tax regime. Is there anecdotal data which the government has which indicates that if you take the exemptions out of the total tax system, it will stop revenue leakage?
Are you trying to close all the exemptions given? No. Those exemptions will last as long as people have availed of it, as long as there are people availing of it. But it's also in the interest of all of us to have the new regime, which has been, in the sense, simplified and with reasonable tax rates, has been a recommendation of very many committees. So the new regime will have to be made attractive enough for people to move there.
Okay, let's move on and let's tell you all the global perspective and the views and opinions coming in this morning. Quite a few Fed governors have spoken. Let me take it across to Anisha and get a wrap on all of that. Anisha?
Oh, well, yes, 4 Fed governors actually spoke overnight, and the consensus seems to be that the Fed rate hike trajectory is not done yet. There might be more hikes coming in the offering. Let me start with the New York Fed chair, wherein Williams said that we still have work to do on the rates. We will watch the data to determine the path of rate rises, but it's a reasonable view to assume that the peak rate will be between 5 to 5.25%. So that's the word coming in. Separately, you had the Lisa Cook, governor, Fed chair, saying that it is appropriate to move in smaller steps while we assess the effects of the cumulative tightening in the economy. She is expecting a bit of a soft landing at the moment, and that's why she believes that the 2% target of inflation can be achieved next year without seeing a large increase in unemployment. Separately, you also had Christopher Waller, another Fed member, speaking. Now, he said that there are signs that central bank rate rises are starting to pay off, but the decline in inflation is not enough at the moment, and Fed will need to keep a tight stance on monetary policy for some time. So the consensus seems to be that the restrictive policy action is likely to stay for long. And just to wrap it up, you have Minneapolis Fed leader Neil Kashkari also saying that the federal fund rate can go as high as 5.4% or even further if the data call for it. Shifting focus to what the investors are making of it, and the famous investor David Rosenberg says that the lines coming in from the federal governors is just filling in the blanks for Powell. In fact, final conditions are likely to tighten from here on. That's the word coming in, and that's why he believes this is a code for weaker equities going forward and wider credit spreads ahead, saying that the risk on rally that we saw at the start of this year is perhaps over already. And talking about back home, you had a note coming in from Jefferies, a strategy note wherein they are talking about changes in the model portfolio as well. As far as the India market as a whole is concerned, they believe that valuations have come off a tad, but 18.5 times when it comes to 1 year forward. And that's why they have become a bit more optimistic when it comes to the Indian markets. However, talking about the changes in the model portfolio,
They've added Bajaj Finance and Chola to their model portfolio. They've increased the weightage when it comes to L&T as well as Reliance, while they have removed ICICI Pru from the list. Same is the case with Indian Hotels and Concord. So they have gone out of the model portfolio and they've cut the weight when it comes to ICICI Bank as well as SBI Bank. So important commentary coming in from Jefferies as well.
Thanks very much, Anisha, for summing it up. That's exactly what some of the top global experts have to say. But let's get a move on and connect with our chartists. We've got Naresh Mirani and Kunal Bothra joining in, as always. Well, it's Thursday, and in yesterday's trading session, you did manage to see that recovery play out on the Lal Street. What's your outlook, Kunal? Because we were just talking this morning, Nikunj, about how so many big events have been thrown at us, and despite that, we managed to hold firm ground.
Well, yes, we've managed to hold firm ground, and I think the base for the markets have also increased from 17,400. We've moved on to 17,700 as the next base or the support. Over the last 2-3 days, there have been bouts of intraday volatility, but the markets have somehow managed to hold on to the 17,700 mark. Now, today being an expiry data, it makes a lot of sense to look at the options data point, and I think the options data point indicate that 17,800 put as well as the 18,000 call. These are the two strikes where there is a heavy amount of put writing as well as call writing respectively, which means that the market should try and settle between this two range. 17,850 to 900 is where I would believe that possibly we may look for an expiry today on a weekly basis.
Okay, let me take it across to Naresh as well. Naresh, looking at the internals for both the Nifty as well as the Nifty Bank and the overall broader market recovery, be it the Adani group of names or the new age tech names, what's it looking like for our markets?
So the broader market has started looking interesting. Stock specific action continues to be strong. Yesterday was a good day in terms of the breadth across the market caps. So it was not just large caps moving up, it was large cap, mid caps, small caps, micro caps, everything doing well. So that's generally the thing which you need for a breakout to continue. So now we watch that 18,000 mark. Once we close above that, that is where the momentum gets stronger. Till that point of time, you continue to be stock specific, and we are seeing stock specific themes playing out. So overall, the view is bias is positive. It will keep getting more aggressive on the positive side once we sustain above 18,000.
Let's find out their top recommendations this morning then. And Kunal, what is it that you're looking at closely in terms of individual stock ideas?
So because I'm expecting the markets to consolidate, I'll focus more on mid-cap names. Two buy calls. First one is about AB Capital, Aditya Birla Capital. Interesting chart. Yesterday the stock managed to break past about the 50-day moving average. Would suggest a buy, 155 as the target, stop loss at 144. And Paytm is the other stock. 2 days of strong price action, very good volumes for the stock, breaking out of that 650 barrier. So keeping 650 as a stop loss would suggest a buy. 720 could be an immediate target.
Okay. In fact, let me take it across to Naresh as well. Find out whether he has any of the new age tech names on his radar as well.
So not as of now, but yes, relatively more bullish now on the some of the names like Zomato, etc., which have bottomed out. The stocks I'm looking at is first is a buy on Reliance Industries, purely holding on to that 2300 support mark yet again. If this holds on, we could get a small bounce back towards 2450. So a buy on dips with a stop loss at 2300 and a target price of 2450. Second is a buy on Mahanagar Gas Limited with a stop loss at 880 and a target price of 1050. The whole gas stocks have underperformed over the last 2 years or almost 3 years since the COVID bottom. What we have started seeing is a lot of these stocks have been coming towards the resistance. So for example, in Mahanagar Gas, 900 to 920 remains a strong resistance. Yesterday it came close to 900. Same is the case with an Indraprastha Gas or a Gujarat Gas or a Petronet. So seems like a sectoral breakout is in the making. So we'll go with Mahanagar Gas, which is the closest to the breakout and could do a quick move.
Welcome back. Let's put the spotlight on Zomato. It's a stock to watch and trade today. As we highlighted, it will be coming out with its third quarter earnings. Now, do remember, we just had the CEO Dipinder Goyal yesterday hinting in his tweet that the company is set for the path of profitability. Not just that, CLSA is very bullish on the company, saying that Q3 is going to be very critical for the company. They've also maintained a buy rating and the target price is at 70 rupees. Well, let's take it across to Vinny to understand how all of these dynamics play up ahead of Zomato's earnings. Vinny.
So absolutely, Q3 is expected to be a turning point. That's the word coming in from CLSA in their preview note for Zomato. Now they expect a significant improvement coming in the profitability of the company. Do not forget that the company has actually managed to achieve that adjusted EBITDA break-even in its core food delivery business. Yes, there is some bit of a time left to achieve that turnaround in its overall EBITDA, but surely it's moving towards the path to profitability. And overall, a 260 basis point on a quarter-on-quarter basis, we are expecting an improvement coming in overall EBITDA margins. Moving on, 50% base increase, BPS increase we are expecting in terms of the contribution margins for the food delivery business. Also, Hyperpure and Blinkit are expected to come in and see a good growth, as well as what we're expecting in terms of the average order value, gross order value, maybe a bit of a muted growth is what we're expecting that on a quarter-on-quarter basis, because what we're seeing coming in is everyone has started stepping out and dine out has started increasing as well. So obviously order volumes also will be a bit flattish is what we're expecting in Q3 FY23. Cash burn, with a quarterly cash burn of around less than 150 crores is what's the word coming in from CLSA. Keep an eye out on Zomato. As of now, CLSA's target is 70 rupees per share.
Okay, Vinny, we'll leave it at that. Meantime, MSCI will be conducting its quarterly rejig today, effective from March. Somit joins in to tell us which stocks may be included and which ones are going to expect inflows.
Well, the MSCI quarterly index review is expected to happen today post-market, so most probably we'll come to know about the announcements tomorrow early morning, and the effective changes of these changes in the MSCI index would be effective from March 1st. Now, according to Nuvama and MK, on the probable inclusion side, there are two stocks that come out. There's Bank of Baroda and CG Power. Now, both the brokerages are expecting an inflow of close to 137 to 150 million US dollars in Bank of Baroda, which is nearly 2.2 to 3 times its average daily volume, that is a 20-day average daily volume. For CG Power, Nuvama is expecting an inflow of close to 150 million US dollars, which is nearly 14 times its average daily volume. On the exclusion side, both the brokerages have assumed Biocon to be excluded from the MSCI India index, and the outflows could be to the tune of close to 46 to 66 million US dollars, which is nearly 5.4 to 13 times its average daily volume. And in case of Indus Towers, the brokerages are expecting an outflow of close to 43 million US dollars, which is nearly 9.2 times its average daily volume. However, apart from this, one important announcement that MSCI will be doing tomorrow is the fact that they could reduce the weightage of Adani Group stocks in the index. Now, MSCI has come out with this clarification where they're saying that certain investor holdings in Adani Group companies will not be considered as free float, and this free float will be reviewed and implemented today along with the quarterly index review. Now, this announcement is expected to come on today with the quarterly index review, and the Adani Group companies that would remain in focus are Adani Total Gas, Adani Enterprises, Adani Transmission, Adani Green, Adani Ports, Ambuja, Adani Power and ACC. Now, according to Nuvama, these companies have a total weightage of close to 5.7% and have a holding value of close to 3.5 billion US dollars in the index, and these stocks would be important to track, because if any reduction in weightage could lead to outflows in these Adani Group companies.
All right, thanks very much for giving us the lowdown on the Adani Group of companies, Somit. Moving right on to some top fundamental stock ideas. What is it that Hemang Jani has as his top fundamental pick within the cement space? Listen in.
One, I think if you have any move from the government about lowering the GST rate for cement, definitely it will be positive. And I think if you look at the quarterly numbers across the companies, be it Ramco Cement, Ambuja, ACC, Ultratech was a tad, disappointment, but the numbers have been pretty good. And given the fact that this is going to be 1 year before the election, the kind of order awarding by the government is picking up pace, which is good for the cement sector, and the real estate sector anyway is doing well. So I think we continue to have positive view. I think Ultratech, Ramco Cement, Dalmia, these are our preferred picks within that sector.
Chakri Lokapre joins us, and you got to pick it up from where some of the consumer tech and fintech stocks have left. Chakri, is there a change of opinion, change of heart, change of numbers, and change of price trend also in some of the consumer tech and fintech stocks? The way a Zomato and a Paytm have made a comeback from the recent lows, it's quite extraordinary, isn't it?
Indeed. If you look at
I mean, to put a little bit of history into context, if you look at 1998 when there was a tech boom, at that point in time, it was technology companies in the US which were doing well, and the rest of the other sectors in the economy were not doing well. Now, you flip it around now in this year, is basically the consumer tech names in the US had overhired, and likewise, Indian consumer tech companies had overhired. And as a result of that, the profitability came down, margins came down. But the other sectors in the US are actually doing well. Unemployment is very low. 11 million jobs are still unfilled. Why this is important is therefore Indian IT services will do well. On the other hand, consumer tech in India still has to go through some of the layoffs and cutting costs. So to improve their margins. And also they're going to scale back on their growth expectations of growing their top line, which means the multiple that you gave in the past, you'll give a lower multiple now. So I think at best they are positional investments and would not be a long-term buys.
Positional investments and not long-term buys. That's the view coming in on some of those new age tech companies. But wanted to also get in your take and outlook then, Chakri, as to where you stand when it comes to the entire, PSU financial space, given the fact that, there had been so many naysayers in the past, but then that sector went on to prove its might, rewarding shareholders and how. Do you believe that now that rally has fizzled out, or is there still more steam?
I think there is a lot of steam in PSU banks, especially, and also within some of the other PSU names like Bharat Electronics, etc. With PSU banks, so simply because when the government is in the budget spoke about a 33% increase in capex, that funding is largely going to come from PSU banks. So the private capex is still not picked up, is unlikely to pick up. Capacity utilization for private sector is still only about 75%. Only when they hit that 80%, 85% mark, as private companies private sector starts doing capex. So against this backdrop, because of recent market turmoil, many of the SBI, Bank of India, Canara Bank, all the PSU banks, they've all corrected very significantly, trading half-time book. So I think with an outlook, and that too, if government is going to be spending, that is good credit. It's unlikely to turn an NPA for the banks. Therefore, I think their outlook remains strong. So I would buy into the current weakness.
Let's look at Adani Group of stocks and what a comeback it's been in some of these stocks. Now, Adani Enterprises on Friday, which is not once upon a time, last Friday was almost at 1,000 rupees. A 1,000 rupee stock has become a 2,000 rupee stock. The 7-day change in Adani Group of stocks now, especially Adani Enterprises, is 27%. It is still a big eyesore, but 27% loss in Adani Enterprises just tells you that how steep the fall was and how sharp the recovery is. Adani Ports is down 2% in the last 7 days. Let's also look at the YTD change in Adani Ports. It was closer to 750, 800. So if you look at, frankly, the collateral damage from the beginning of this year, it's about 26% now. Chakri, have you been shopping in any of the Adani Group of stocks?
Adani Ports, as you mentioned, clearly looks good. And in fact, we've been adding in Adani Ports. Because if you look at the company and if you look at some of its parts, the ports business, if you apply a 10, 11 times EBITDA, that itself comes to like a 750, 800 rupee price. On top of that, they have a land bank. And that, even you ascribe a very low valuation of, maybe 4-5 million. But that would also add to maybe another 10, 20 rupees. Then on top of that, they're under construction ports in Colombo, in Kerala, etc. So if you all that, you assign a low multiple of the equity invested. You add up all these things together, it's well north of close to 1,000 rupee stock. So even if you just look at Adani Ports, and let's say that you discount the others, the ports business, I think that in itself is sufficient, probably 30-40% upside from current levels.
First the fall and now the comeback. What is the real deal with Adani Group of stocks? As a trader, somebody who really wants to trade without a view on the fundamentals, P multiple, all the mumbo jumbo which has happened in global media, should one venture into Adani group of stocks? Is the risk reward ratio, Nuresh? I'm going to focus only on risk reward ratio favorable for a trader.
Absolutely not. The bounce has been pretty sharp in a lot of these Adani names, and there is a possibility of further sell-off coming in if the MSCI weightage is reduced. So in this case, again, like I've been saying, the only two stocks one can actually look at a buy on dips is Adani Ports and Ambuja Cements. So if we fall to 350 levels on Ambuja Cements, that would be an entry price going forward. Adani Ports has already moved up 50% from the lows, but if that goes towards 500, 530, that is the price point you want to get in. The rest of the names are still overstretched, even on a basis of, say, from pre-COVID to the prices right now. So a lot of these stocks are still up 5x, 10x, 20x from pre-COVID prices. So one has to be careful here. There will continue to be volatility. We've seen a 100% move in Adani Enterprises. So I would be wary of all the Adani names because it's difficult to trade them. So the only thing one can do is on a sharp decline, look out for Adani Ports and Ambuja Cements.
Got L&T Defense as well in the spotlight. The company has signed that contract with the Ministry of Defense for 41 indigenous modular bridges, the cost of worth which is over 2,500 crore rupees. This is going to be a big shot in the arm for the overall defense order book as well for the company. Chakri, just wanted to get in your thoughts on L&T in particular on the back of this order win and where else you're seeing potential within the defense space.
L&T clearly very well positioned. Valuation sits on its side. The order book, while it's a large one, it's in the scheme of things, it's an okay order book for L&T, but it points in the right direction. The multiples are pretty much in your favor. So outside of this, I think Bharat Electronic, because actually on L&T, 1 in 4 projects or 1 in 5 projects in India actually go to L&T. So if you believe that capex is going to go up, which we do, I think L&T one should buy. Then outside of that, Bharat Electronics, clearly it's expanding its range of products and its multiples have corrected. Its growth is intact. So I think clearly Bharat Electronics is a buy.
Now, there are two stocks on my radar this morning. Stock number one, by the way, they both are based on numbers. First one is Trent. About Jeffrey reports, which seems to be endorsing pretty much the obvious that the strong growth momentum continues. Trent is an expensive stock. That's the big challenge for them. But what was going for Trent, or what is working for Trent, is that they're able to now emerge as a destination to be or a go-to destination with some of their fashion brands, whether it is Westside or whether it is Udio. They also have, by the way, a JV with Zara. Yes, you heard me right. So I'm just introducing the business. Standalone EBITDA was up 15%. Margins, you may argue and say that it was not that great, but given that the company is in a very high growth mode and it's a very strong balance sheet and it is backed by Tata, this stock has been an expensive stock, but I think will remain expensive. These numbers are endorsing that the policy what they are following in terms of adaptation, in terms of expansion is really working for them. It is not a stock which is going to give you solid multi-bagger returns from here, but it's a stock which in a sense has potential to continue its outperformance given the kind of product profiling they are looking at. Very strong focus on expansion outside the 6 metros, and which I think is working like a charm for them. Let's look at the stock here, and you'll be surprised that in last 3 years, let's compare Trent with ABFRL, Aditya Birla Fashion. There's a lot of repair work which is happening in Aditya Birla Fashion, but if you compare Trent with ABFRL, Trent is up 86%. ABFRL during that same period, I think has clearly struggled to give any kind of solid return. There you see how stark the difference is. Second is Cummins. Well, we all know that. I mean, it's the industrial cycle and the entire capex cycle, which in a sense is supporting them. For the quarter gone by, the numbers were strong. For the quarter gone by, they've not given any kind of concrete guidance. But the fact that when things on the commodity front are easing out, the margins have stabilized. It's a stock which has a lot of potential as the new energy transition story, I guess, in India is just about picking up. So given that management is optimistic on the demand outlook and commodity prices have started coming down, even though the management has not given FY24 guidance, I guess markets will not be disturbed because of that. The stock has been an outperforming stock, up 58% in the last 52 weeks. It may stabilize, or it may just get into some time-wise correction. But I get a sense that based on the numbers and the valuation and the current setup, the stock has potential to continue its outperformance well into 2023 as well.
All right, potential to continue its outperformance. That's the word coming in on Cummins, and pretty interesting to understand a little bit more about the store edition when it comes to Trent. Well, let's get a move on. We're peppering the show with lots of top fundamental stock ideas for you, our viewers. So let's hear it out from Neeraj Diwan. He's bullish on Surya Roshni.
The stock I want to recommend today is Surya Roshni. Surya Roshni is into two different businesses. One is the lighting and consumer durable business, where 24% of the revenues come from this division. And in this division, this is the second largest lighting company in India. And you're seeing a decent growth coming, and plus there's a backward integration going on because of the PLI benefit that they've taken. And the second business for them is the steel pipes and steel strips segment, where 76% of the revenues are contributed from this division. And they are the largest producers of GI pipes in India and the largest exporters of ERW pipes from India, second largest exporters of ERW pipes from India. And this is also, have strong demand coming from the consumer divisions, the consumer segment, the different consumer segments. The user industries for this division are water, oil and gas, city gas distribution, natural gas transmission. So these divisions are giving good growth to this. And in the recent quarter, we've seen there's a good EBITDA by ton growth, which we've seen in the results. So that growth should continue going ahead because of the strong demand from the user industries. And even the debt, which they've been slowly reducing, is declining. So they recently also reduced the debt by about 156 crores. So even even if you valued this at a conservative 8 times EBITDA 1 year forward, my target comes to 750. So it's a good stock for investment for 9 months to 1 year perspective.
The other space which in a sense is showing signs of some life now is good old pharma. Cadila commentary was strong. Lupin numbers are due today. And Aurobindo Pharma, popularly known as Oro Pharma, that will also come out with numbers today. Chakri, everyone is on the same side of the boat when it comes to pharma. Ownerships are low. Opinion is dull. Could this be the turn moment for pharma?
Given that pharma currently, is going through, and lots of individual companies have their own factors that you have to analyze to pick stocks. And given that, the stocks have not done well as a sector in the last couple of years, the ownership has gone down, the weightage in the indexes has gone down, and therefore our interest also in the sector has gone down given its low weightage. Now, amongst these, I think still Sun Pharma, Lupin, fairly good numbers today is expected. Sun Pharma still looks decent. Zydus amongst the the mid cap companies. So I think it's more a selective approach, but still we are hugely underweight pharma, and I think that stance will continue.
Let's get in your take on some of the buzzers in yesterday's trading session, and without a doubt those cement counters really lit up the screen across the board. What's your take on maybe mid-cap cement, where you're seeing opportunity here?
So in terms of cements, the place I'm looking out for is one is Dalmia Bharat Cement. The stock has been testing that 1900, 1950 mark for almost the last 2.5 months. This might be the fourth or the fifth attempt around that area. If that breaks out, it could make a move towards 2200 levels. So first is Dalmia Bharat Cement, which looks interesting. Then there is Ramco Cements, which is again seen good volumes in the last two sessions. The stock has given a breakout on a shorter term time frame and good price volume action. So out here, this is a buy at current levels wherein you could keep a stop loss at 710 and expect a move towards 800, 850 levels. So these are the two cement names which I'm looking out for. And on the small cap side, not seeing a similar traction. So on the mid cap side, we are still seeing some traction. So Dalmia Bharat and Ramco Cements.
All right, watch out for some of those mid-cap cement counters. But moving right on, lots in the news today, and Hindalco also set to report its Q3 numbers. The metals major is likely to see a muted quarter sequentially. There could be a marginal uptick in the revenues, while their profits could decline. Let's take it across to my colleague Ashesha. She tracks the sector closely and joins in to walk us through the ET Now poll. Ashesha?
We are expecting muted set of numbers from Hindalco this time around. Lower aluminium prices are expected to impact realizations for Hindalco on a sequential basis. In fact, aluminium prices declined by nearly 2% on a quarter-on-quarter basis, and that is the reason we are expecting realizations to fall on a sequential basis. As far as numbers are concerned, consolidated revenue is expected to increase a tad bit by about 1% on a quarter-on-quarter basis. As far as margins are concerned, they could expand a tad bit. We are expecting margins to come in at 7.9% this quarter versus margins of 7.5% that the company had reported in the previous quarter. Let's talk about the segment-wise performance then. As far as the aluminium segment is concerned, EBITDA per ton is expected to decline by 13% on a quarter-on-quarter basis. This is because of fall in aluminium prices that we saw during the quarter, partially offset by the fall in coal prices that was prevalent during the quarter. Meanwhile, copper EBITDA per ton is also expected to decline marginally by about 2 to 3% on a quarter-on-quarter basis. Novelis, which is Hindalco's wholly owned subsidiary, reported its numbers a couple of days ago, and the numbers were much weaker than what the street was working with. On the top line, we saw a decline of nearly 3% because of lower aluminium prices, and adjusted EBITDA per ton also declined by nearly 33% for Novelis on a year-on-year basis. For Hindalco on a standalone basis, we are expecting weak set of numbers, mainly because of decline in aluminium prices that we saw during the quarter.
Naresh, why is that we don't have a clear trend in metals, whether it's Hindalco or Tata Steel, with the exception of, let's say, JSW Steel and JSPL? The metal cycle per se, at least in last 40 days, 50 days, has been ek din upar, ek din niche types.
So if you look at even the base metal prices, they have not really gone up in a big way. So aluminium, LME aluminium continues to be in that 2400, 2600 range. We've not seen a sharp spike over there. So as of now, and on the same side, we are seeing global, say, US dollar index also has been flat. It's not seen a further crack. So as of now, it's a cycle wherein you are going into a consolidation phase after the big fall, at least on the aluminium side. And in steel names, it is very different. So Hindalco, for example, has fallen from 630 to 330 levels, then went back to 500, now back to 430. But if you look at a Jindal Steel, the stock is say 5% away from an all-time high. JSW Steel is 5% away from an all-time high. But at the same time, the PSU names like Steel Authority of India Limited continue to remain on the lower end of the range. And Tata Steel, on the other hand, is on the sideways. So what we are seeing right now is it is no more a sector wherein it's a cyclical play wherein everything does well, which happened in 2021. Now we have to be stock specific in this sector. So the whole cycle play is over, and now one could be looking at stock specific moves. So there could be a stock in the sector which would be down 20% and something could be up 15% at the same, say, 3-month period. So for now, it's time to be stock specific in metals rather than take it as a basket view.
I just want to go back to, the MSCI REGIC, which got announced, which of course is going to be applicable from March, but something that Soumit as well was highlighting. And Kunal, the one stock which has actually made it to the inclusion list is BOB. You've always talked about the strength across the PSU or rather PSB basket and beyond SBI. Do you still have conviction on names like a BOB?
Well, yes, absolutely. I think Bank of Baroda and Canara Bank, they still stand to be one of the better performers the breakout for these stocks, for example, Canara Bank, the breakout was at 166. Look at where the stock is right now. 300 has now become a base or a new base for Canara Bank, and that's a substantial change for the stock. Same was the case with Bank of Baroda. The stock was just tottering at the 102, 110 odd mark for a quite number of months, good amount of time. And from there on, the base has shifted significantly higher. Now we are talking of 150, 155 as a major support for Bank of Baroda. So when stocks go through this dramatic change of major supports, and the supports they shift by at least 50% kind of a margin, that's when new trends tend to emerge. Yes, there would be bouts of volatility in between, but then for traders who are looking out for more of a longer term, trying to position themselves, buying the stock at the renewed support, I think that's a very good strategy. So would be the case with Bank of Baroda. Would maintain the stance. I think 150 odd levels, 55 was the recent low. That remains to be a strong support, and if the stock happens to come back to that level, it's a good zone to buy again.
Okay. These stocks have gone down, let me put it this way. Even though they've come on the right side of the clarification in terms of the exposure to Adani group of companies, you must respect that where they were a year ago versus where they are right now, a lot has changed in terms of positioning. But this was a crowded trade, and this crowded trade, in a sense, has suddenly reversed, so to speak. 7 minutes to go. We'll get the free, first pre-open rates. It's a busy day of earnings. Voltas, you've got Zomato, LIC, lots and lots of numbers. I want to particularly point out Narayana Hyderabad's numbers, Narayana Healthcare. Net profit is up 57%, and net revenue is up 17%. Now let me explain it to our viewers. Hospitals are not going to be growing exponentially. Hospital growth is a function of new expansion, and largely if things are normalizing. There was a time in the hospitals because of COVID, the planned surgeries were off the table. Medical tourism, if I may use the word, was completely off the table. So that business is coming back. But some of these businesses, when they come back, they may not add too much to the top line, but they may add to the bottom line because you make a lot of more margins in some of these businesses, and that I think is the story for Narayana Hrudayalaya going forward. Chakri, this is a fascinating space. One side there's massive peak consolidation which is happening in the hotel space, in the hospital space, I beg your pardon, and on the other hand you've got the normalization which has happened in the healthcare sector. Do you like anything in the healthcare sector? If yes, which one?
I think in that space, clearly Apollo Hospital is still the leader. Still looks good. Narayana also looks good. Like you pointed out rightly, all the elective surgeries are coming back, the occupancies are moving up. And now is the time when, and they're also expanding, all these companies, and they're also expanding into the tier 2, tier 3. And when you look at their operations, what they're doing into this tier 2, basically now they're trying to bring healthcare to where in the past, they would, from people from tier 2 would travel to tier 1 for an operation. Now they're trying to reduce that inconvenience for the consumer and or rather the patient. So these stocks have also corrected. If you and given their annuity and their cash flow, it's a very predictable cash flow. People fall sick, get admitted, and therefore they can sustain a higher multiple and EV/EBITDA multiple, and current levels look good.
All right, let's move right on then. And here's the news fatafat, some of the other important headlines that we're tracking aside of the markets. The Turkish president has conceded shortcomings after criticism of his government's response to the massive earthquake that's killed over 15,000 people in Turkey and Syria. Even as rescue operations were on, thousands are still reported to be under debris. Meantime, beverage maker Coca-Cola is exploring the possibility of taking two of its biggest India-made brands, Thumbs Up and Maaza, to global markets. The company's president, Henrik Braun, has said that the beverages giant was looking at the possibility. While Thumbs Up has crossed $1 billion in sales in India, Maaza Juice is expected to enter the $1 billion club by 2024. And Disney is all set to cut 7,000 jobs, or 3% of its total global workforce, as part of the multi-billion-dollar cost-cutting initiative aimed to streamline the company's operations in a period of media industry turmoil. The move marks the most significant action that Bob Iger has taken since returning to the company as its CEO in the month of November.
In the meantime, video streaming giant Netflix has finally announced its guidelines on password sharing, starting first with users in Canada, New Zealand, Portugal and Spain as of yet. Remember, Netflix has estimated around 100 million users around the world, which use a shared account. In the meantime, Alphabet lost about $100 billion in market value after its new chatbot shared inaccurate information in a promotional video, and the company failed to dazzle, feeding worries that the Google parent is losing ground to rival Microsoft. Also back home, electric scooter maker Ola Electric is on track to deliver its first four-wheel vehicle in the second half of 2024. Last year, Ola's founder Bhavish Agarwal said that the company aimed to price its first car at less than $50,000.